$13 trillion. That's how much new money the US Federal Reserve created between March 2020 and July 2021. That's 13 million millions, or 13 followed by 12 zeros. This unimaginable sum of money is more than the US spent in its 13 most expensive wars combined, and represents 56% of its GDP. A few months later, this flood of cash contributed to one of the worst global inflations in history. And while everyone struggles, there are companies that abuse this situation to profit more than ever. But there are moral ways how you can benefit from this situation as well.
Them have looked at the inflation.
Inflazione.
Inflation.
Welcome to Bold Move TV.
You were probably shocked to discover how much prices have risen if you recently visited a grocery store or a shopping center. Everything has become significantly more expensive, from clothing to cereal, as a result of inflation. But what actually causes it? Inflation is the result of many factors, including an increase in demand for goods and services, which makes it difficult for businesses to quickly scale production to meet the increased demand. As a result, prices rise. In other cases, it's not just an increase in demand that drives up prices, but also an increase in production costs for businesses. For example, increasing raw materials or labor costs could force businesses to raise prices on the goods and services they sell. But the main cause, and what we're experiencing for the past 2 years, is the devaluation of currency. Simply put, the more money is added into circulation, or you could say printed, the lower value it holds. This is done by national central banks. In the US, it's the Federal Reserve. The biggest misunderstanding is that people do not realize that monetary policy is a major cause of this printing.
And that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy.
Low interest rates means more people and companies can take loans. What do loans have to do with this, you ask? Contrary to logic, when you take a loan from your bank, the bank is not borrowing you their money or their clients. This borrowed money is actually newly created and therefore added into circulation. This is obviously oversimplified, but yes, this is really how it works. As you can see, it's a pretty simple equation. Many cheap, borderline free loans equals large sums of new money in circulation equals catastrophic global inflation. Who profits from inflation and how they do it? Despite inflation and rising costs for raw materials and labor, many large US corporations are reporting record profits. They use these increasing costs of materials, components, and labor as excuses to raise the prices of their products even higher, resulting in bigger profits. Inflation sort of disguises these price increases. When prices for everything around you are rising, it's much easier for companies to raise their prices and not experience that consumer blowback. This is why corporate profits are close to levels not seen in over 50 years. Corporations have the power to raise prices without losing customers because they have little to no competition. Grocery prices are out of control because, for example, in the US, just 4 companies control 85% of meat processing. One corporation sets the price for most of the seed, corn, and 2 giant companies dominate most consumer essentials. Big Pharma, a group of 5 powerful companies in the United States, is causing drug prices to soar. Wall Street has consolidated into 5 giant banks, and so on and so on. And this is going on all over the world in literally every industry you can think of. All are raising prices and increasing profits. Not because they have to, but because they can. They of course deny this. It's a serious allegation. Even though there's research to back it up, you can see it in the description. Sure, rising profit margins may look suspicious, but they themselves shouldn't be counted as evidence of companies taking advantage of high prices to fill their pockets. Maybe other factors contributed to this and are overlooked. But is this the case? Let's look at the facts. Almost 100 of the largest US publicly traded companies reported profit margins for 2021 that were at least 50% higher than in 2019. So who's piling up the profits? And more importantly, how they did it. Let's look at the changes in operating margin sometimes also referred to as return on sales. This measures how much profit a company makes on a dollar of sales after paying for variable costs of production, such as wages and raw materials, but before paying interest or tax. This leaves no room for excuses and speculation. Corporations will of course invest most of these profits into other companies, research and developments, and make different acquisitions and investments just to keep their net income and their annual income statement nice and negative. This way, when you look at their balance sheet, you won't ever suspect anything without digging deeper.
Deal's gonna happen, and of course, as you might expect, Change Healthcare stock is moving up.
However, this does not change the fact that all of us paid them that much more than we should have. Crazy, I know. So these are the greediest publicly traded corporations as of January 2023. The largest producer of natural gas in the US, EQT Corp, is at the top of this greedy list. Its operating margin increased from 20.3% in 2021 to 64% over the last year. This equals $4.3 billion. And the 64% is more than 20% points higher than the company's prior all-time high set in 2015. EQT took advantage not only of inflation, but also of Russia's invasion in Ukraine, which further spiked the price of natural gas. On its earnings call and its investor presentation, the company cited cost reductions at its West Virginia wells and the impact of acquisitions as reasons it's piling up the cash. When Forbes requested a comment on this issue, EQT did not respond. Pharmaceutical giant Merck is the second on the list with a hefty increase in operating margin by 20% year to year. At 35%, it's as high as it's been since 2004. This accounts for a whopping $16.8 billion. Merck did not respond to Forbes investigators' request for comment.
Robert, some strong numbers today. You all beat on the top and the bottom line and raised guidance for the full year, both for sales and for earnings per share. What's driving that growth?
Well, really, we have such strong momentum across all of our key growth drivers, whether it be Keytruda, Gardasil, or animal health business. The momentum is there. We're making steady progress in the pipeline, and as you say, what it allowed us to deliver was really a strong quarter.
The pharmaceutical company Biogen, that's made its name treating multiple sclerosis, saw its operating margin jump from 3.4% in 2021 to 22.2% in 2022. This equals $2.4 billion. Research analyst Miles Minter said that Biogen's increasing margins are the result of cutting spending rather than bringing in more money. They can't price gouge because they have a generic competition. Another one on the list is Hess. Like other energy companies, Hess is cashing in on the higher prices brought on by the war in Ukraine. Hess saw its operating margin rise to 36% from the previous 23%. That's the highest margin on record for the company. The previous record, 22%, occurred in 2014. And as you might have guessed, Hess never addressed this. If you think big pharma and energy companies are the only greedy ones, here are two more examples. Mining company Glencore's thermal coal business benefited from record prices, helping profits double to over $18 billion in just the first half of 2022. Global food commodity trading corporations such as Archer Daniels Midland reported a 60% rise in their quarterly profits. And another one, Cargill, increased its revenue by 23% to a record $165 billion in the latest financial year. It says it gave $163 million to humanitarian relief and other good causes, which equates to 0.1% of sales. And we can go on, but you get the point. Companies on a national level are not to blame, nor is your local grocery store or its supplier. The cost of their goods and services already exceeds the global inflation rate. Therefore, in most cases, they have little to no room to lower the prices or increase wages. The problem is extreme corporate greed at the very top of the supply chain. But let's not be all negative. Inflation is often viewed as this evil thing, but healthy inflation is not only good but necessary for the economy and everyone. Let me explain with an example. Imagine you have a huge sum of cash laying around, let's say $10 million, and now imagine negative inflation. This means that money gains value rather than loses it. By the way, this also happens from time to time. So in this situation, people with a lot of wealth are incentivized to use their money as little as possible. not making any investments, not buying anything, no risks, and no contribution to the economy and the global flow of value. What do you think would happen if everyone's best money-making strategy would be to just sit on a pile of cash? The global economy would come to a screeching halt. That's why healthy inflation around 2% is necessary for the global economy. People and companies have to make wise investments and move money, because otherwise their wealth would slowly but surely lose its value. If a few greedy corporations at the top of the supply chain didn't use inflation as an excuse to secretly increase their already massive profits, and the inflation rate would affect everything equally, especially wages, no one would feel its impact. Sadly, this is not the case, and we ordinary citizens are the ones taking the hit again. So what can you do to not only protect yourself from inflation, but profit from it? Investing in tangible assets is widely seen as an inflationary hedge. Gold has been the traditional investment pick. It's a physical asset and tends to hold its value, while the value of financial assets may drop due to the decline of purchasing power. Gold is not a perfect hedge against inflation, but its price does tend to rise with inflation, which allows you to maintain your purchasing power. In January 2020, gold sold for around $1,500 per ounce. Today, in January 2023, it had climbed to nearly $2,000 per ounce. Agricultural commodities like wheat, corn, soybeans, livestock, and timber are less expensive tangible assets that do well during inflation. Industrial metals like nickel, copper, and steel also tend to do well. Yet, another tangible asset to consider is real estate, which tends to rise in an inflationary economy. We all have to live somewhere, and whether the real estate is apartments, single-family homes, or another type of structure, the value of the real estate will rise and keep pace with inflation sooner or later. Investing in bonds may seem counterintuitive, as inflation is typically harmful to fixed-rate debt. That's not the case for inflation-indexed bonds, which offer a variable interest rate tied to the inflation rate. Stocks also have a reasonable chance of keeping pace with inflation, but when it comes to doing so, not all equities are created equal. Investors should focus on companies that can pass their rising input costs to customers, such as those in the consumer staples sector. This may sound weird, but debt can really be good when there is inflation. If $1 today is worth more than $1 tomorrow, and you borrow it today and return it tomorrow, you have made a profit. This, of course, works only if your interest rate is lower than the inflation rate. That's why when the Fed lowered interest rates and started buying corporate bonds, guess who started borrowing all that money? World's largest corporations: Facebook, Microsoft, Apple, and so on. Although they don't need all that money, Apple was at the time sitting on liquid cash worth over $200 billion, but it still borrowed money, because why use your own money when you can just throw your money into the S&P 500 and get a 10% return while borrowing at just 1%. And this strategy can also be applied during time of inflation. Since it looks like not much can be done to fight corporate greed yet, we can at least mitigate its effects. Thankfully, inflation seems to be slowing down a bit in the last months. But one can only say for sure what will happen. If the economy is finally returning to normal, or there's still a recession around the corner. But whatever happens, don't forget, it's only money. What do you think? Let's discuss in the comments. Have a nice day and see you soon.